I think, both of our traders have been pretty clear in their strategies. John is a continuation momentum trader who trades, when there's a breakout of a congestion zone, he kind of follows that move. Jamie will trade one of two ways. Either he'll wait for, a retracement off of, a big move and ride that continuation, or he'll trade breakouts and continue off of that. So we all of us know, all of us have been in the market for a very long time. We know that the trading strategy itself is not the most important thing. There's a lot of elements that are involved in trading that really determine whether traders are successful or not. And one of that is really the trade management. So let's talk a little bit about that. Let's talk a little bit about whether both of you either enter positions, all at once, or do you scale in, scale out? Do you have multiple positions, or do you look at it on a very singular basis? I mean, John, do you want to go ahead and start?
Sure. I like to scale in small. Small to me is one lot. And then when I get into a spot, like where are we at? We're on a 1 hour chart. Let me go back down to a 15-minute chart. As we break through these moving averages, I'm going to add on 5 lots or whatever I could on Ethereum. I'm not really sure what I can do on that yet. So I would want to definitely add on at least another lot to trade this back down to have multiple positions coming on there. But I need to have this position into profit. We do have structure right here, I see. So as we get past these moving averages, I definitely want to get into this. We do have an area of structure down here at the bottom that I'm dealing with right here. That is right here. And that could easily bounce there. So I need to be careful at this point and at these 2 points to make sure we get through. So that's where I'm at right now. And if we break the tops up here, I definitely want to exit the trade. It's not going my way. So, I mean, it could still bounce in the 50, but I'd rather get out with as little damage as possible because I need to be able to trade the next day. I can't have big losses.
What about you,
So
Jamie?
hopefully that makes a little sense.
Yeah, no, that makes a lot of sense. Well, so these very short-term trades, something I usually wouldn't do, but everything for me is about the initial risk. So it's very, very focused on the entry, and the stop losses in, and that will take care of itself, right? So winners, right? They don't take care of themselves. You get a big move. I don't like necessarily trailing stops because you'll get shaken out of positions. At least that's my experience. So I will take partial. I am not very good at adding to trades, winning trades. If that's something I really need to work on and figure out more of a systematic way to do it. But when I do my analysis, end of day stuff, and have my levels mapped out, there are more important levels than others. The very important levels I call decision points. And that's where I want to make a decision, right? It's where I think the market's going to make a decision. So that's where I want to make a decision. In the case of let's go back to this Bitcoin chart. I don't know if my screen's on or not, but in the case of this Bitcoin chart, like the huge decision level is this old high in this trend line, which is like 53,000. That's where I want to trade. And going into it, it's support because it's below the market. So support is support until it's broken. But if we break it, I look for support to become resistance. So I could change my mind very quickly depending on what happens, especially if it's a fast market. So that's the best way I could put it.
Yeah, I like that.
That's good. Yeah, that's good stuff. Now, John, you do something that's very interesting. I know that trader psychology is always something that many new and even seasoned traders struggle with. So from what I understand, you have multiple accounts, right? You kind of focus your trading on one account, and then you have other accounts that copy them. So you kind of trick your own head to focus on the smaller account size, while your reality, you're trading a larger account size. Can you talk a little bit more about that?
Yeah, well, what happens is for me, it's easy to come in the market and maybe make $500, but it's hard to make $3,000. So if you can have, 3 accounts, 4 accounts, you're able to quadruple that. So that's the idea very easily with low stress. And see, right now, when you get into a prop firm, it's very difficult to pass. You need to hit a 10% value with only losing 4% per day. And that's actually very challenging, but yet you have to learn to stack your trades so you can get there. But it needs to be on a trending move so you don't get caught. And if you do get caught, you need to be able to get out quick. Like you say, you need to manage your losses. So as it comes back at you, before it hits zero, you better be out of that last trade you stacked, and so forth and so on. So, but we want to continue with the trend if we can. But the idea is to get past the initial, I guess, the difficulty of a prop firm. And then after that, it's a whole different reality. Now you can trade for $100, $200 a day. If you're doing 3 different multiple accounts, that's $600 a day times 20 days. That's a lot of money. So that's how I look at it. And that's what I try to give everybody an idea that that's the goal for where we're trying to go. And not only do you have to have prop firms, as you make money, you can have your own accounts, personal accounts. You can go over here and put in maybe 3 of your own personal accounts, have $10,000 a piece. As you build those, go to 20,000. But the idea is now you're going 6 times that 200. Now imagine the kind of potential that you can make out there.
So in that type of structure, how do you withdraw funds? At what point do you psychologically, so you start off with your initial 5,000 accounts. Is there certain accounts that you take the money out of? Is there, how do you start fresh without your current account growing too large for you not to be able to handle it psychologically?
Well, usually I have between $100,000 and $200,000 accounts. And what I do is every month I just pick one and I get paid from that. I roll it over to the next one. So what happens is while you're getting paid, you can't trade for 3 days. And you know what it's like not to trade for 3 days when you see your favorite setup going. So I know Jay may be going crazy over there. So you gotta be able to have one still to trade. And if you have a multiple, you're okay. You can maybe get paid on 2, let one run, and then as you get done, the next month you get paid on the other. So works out really well. And you can do that with your own personal accounts. It doesn't have to be prop firm. You can have 3 of your own personal accounts, like you said, $5,000. You get paid on one, you let the other 2 rotate through, and then just keep rotating as you go, and you just keep making the money. But there's less stress. You're able to be stress free, and that's the problem with trading. If you have too much stress, you're never going to make it.
I think that's a very interesting approach, because a lot of our viewers and a lot of people in general probably don't think about it like that. They just put all their money into one account and they struggle with the numbers that are showing up, either the losses being too large or the profits, not knowing what to do with their profits. So being able to split them up into accounts where you can't necessarily see and trick your own brain, I think in some ways could be the method to the madness that really helps you, continue to trade without, being psychologically hobbled by, too large of positions.